Now, the SEC took its first actions against SPACs in March, and after that, the pace of these deals kind of slowed to a crawl for the next 6 months. Good. But lately, they've been accelerating again. It's like people have forgotten what Gensler said. We're now seeing roughly 20 SPAC fundraisers per week. That's insane. Again, it's because while buying a SPAC stock after a deal gets announced is a terrible bet, getting in on a SPAC IPO actually makes sense financially because of that $10 thing I talked about. As long as you come in early when the SPAC is still just a pile of money, you've got a no-lose scenario because you can always decide to cash out at $10 whenever a deal gets announced. More importantly, when money managers participate in the SPAC IPO, they don't just get a share of the SPAC. They're actually buying a unit, which includes one share and a fraction of a warrant. These fractions of warrants typically aren't worth much, less than $1 in most cases. But when you throw in the ability to redeem your shares for $10 each, they're basically looking at a guaranteed win. Say the price of the warrant's worth 50 cents, and you pay $10 for the unit, because $10 is standard in these offerings. Well, that's a 5% gain if the SPAC flames out. Because there's less demand, the SPACs raising money now have been making the terms even more enticing. Used to get only a third or a quarter of a warrant per share. Now they're typically giving you half a warrant or more. The old standard was that the SPACs would get you 2 years. They would get 2 years to find a takeover target, or they give you your money back. Now it's 18 months. And rather than give you $10 back if you decide to redeem your shares, they're giving you $10.10 or $10.20. That's 1 or 2% interest. Low bond rates, it's not bad. Throw in the warrants, and this is basically a very lucrative money lending operation. Problem is, most home gamers can't take full advantage of these SPAC IPOs, and the companies that decide to merge with SPACs are getting a raw deal, too. The bottom line, the SPAC deals keep coming because they're a great way for institutional money managers to get a guaranteed return. But everybody else in the process gets the short end of the stick. Sooner or later, privately held companies will figure this out and stop agreeing to participate. But until then, I recommend you give this group a wide berth or no berth at all.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.